Well, you may have noticed if you've ever been in the district around Rainier Avenue, Martin Luther King, down to Renton, they're all over, and they are a growth industry. I'm afraid, given this economic climate, they're going to be more of a growth industry, which, if it were just providing credit for low-income people who need credit just the way anybody else does, I'd have no problem. I have no problem with credit unions, no problem with banks. I do have a problem with the payday lending business model. What they do is they suck people in with what seems like a very cheap short-term loan that'll get you to the next paycheck, 14 days. But any of the hard knocks of ordinary life, a sick child, a need for a new winter coat, additional groceries, all of a sudden you find yourself not being able to pay it off. And then begging, borrowing, or God forbid, stealing in order to get the money to pay it off, and then have to get a new one. And that begins a cycle, a very downward spiral for a lot of good people. And it leads to poverty. It leads to way in excess of any reasonable interest rate. When you take the interest they pay on these things, and they're allowed to charge $10 per 100 for the first 500, and then $15 per 100 for the next two, and that's capped at 700. What that does is create an interest rate which, when you annualize it, not just for the one loan, but call it a 52-week phenomenon so that it's comparable to the interest rate you see advertised on your bank's wall, you get 391%. That's the allowable interest rate. My wife and I own a home. If we want to get a mortgage, it ain't going to be 391%. It's going to be, these days, 5, 4, somewhere in there. Why should low-income people be paying these astronomical rates in order to get credit for the ordinary daily debts and things that people need to pay off? It's because they're poor. This is part of the high price of being poor. And I'm sorry to say this, and I don't mean to be flip, but I think the business model that's followed by the payday lending industry, as opposed to the banks or credit unions, is more like that of your local drug dealer or loan shark. You give them a taste of it, and then they come back. And that's what this is all about. It's an industry that is not well regulated. It is regulated by the Department of Financial Institutions, but there are so many things that they're not required to report. They're not required to have lengthier